Well, it's one of the most anticipated IPOs of this year from a consumer standpoint as well, because of the buzz that Swiggy and Zomato have created in our daily lives and increasingly creating with all the quick commerce apps that they have as well. So for those looking at the details, November 6th is when the IPO opens, closes on November 8th for retail shareholders. Price band of 371 to 391 rupees. The size at the higher end of the price band would be close to 11,300 crores, of which 4,500 crores is the fresh issue, and the offer for sale from existing investors is close to 6,800 odd crore as well. So at the higher end, the post-issue market cap that Swiggy is seeking is close to 87,300, a little over $10 billion, whereas Zomato currently is trading at around 2.2 lakh crore in terms of market cap, and that's the divergence where there is a fair amount of interest. If you look at the overall B2C gross order value for Swiggy, that's increased from 20,000 crores in FY22 to closer to 35,000 crores in FY24, and in the first quarter itself, for which they've reported numbers, it's close to around 10,000 crore. So you analyze that to close to around 40,000 for this year itself. The average monthly order frequency in the number of times people order on the app has also increased to around 4.5 times. And if you look at other things as well, the food business, that has shown a bit of a turnaround. The gross order value has increased to 25,000 crores as of FY24, and the contribution margins in the food business has also improved all the way up to 6.4%. Remember, the comparable number for Zomato was close to 7.6% in the quarter that went by. If you look at the e-commerce, rather the Q-commerce business as well, the gross order value is close to around 2,700 crores for the previous quarter, implying an annual run rate of close to around 12,000 odd crores for this year itself. But out here, while there has been improvement on the contribution margins, they are still negative as compared to Zomato, which is positive. So a bunch of questions that we posed to the management, and two important takeaways that we got. They're currently at around 550 dark stores as against Zomato, which is close to around 800. They will look to open around 1,500 dark stores over the next 4 to 6 quarters. And secondly, food delivery EBITDA margins, not the contribution margins, EBITDA margins are close to 0.8%. On a steady state, the industry sees potential of 5%. So you add more dark stores, that becomes your revenue driver, and there is case for food delivery margins over the next few years to actually quintuple from closer to 1% to 5% itself. The question is, what are you paying for all of this? More importantly, Zomato market cap at close to 2.2 lakh crores, Swiggy at the upper end is 87,000 crores. Assuming that the industry grows at the same rate for both of them, then price to sales multiple 2 years forward, Zomato is actually 10.6 times, whereas Swiggy is 4.2 times. More on the street, most on the street were expecting, a 25 to 30% sort of discount, but this seems like a 60% discount, and maybe that would have a lot of people interested. Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.